Well, Peregrine Holdings and Cannon Asset Management announced the acquisition of Hollard Life's shareholding in Cannon by Peregrine. That really doesn't make sense. Let me start again. What happened was that Peregrine Holdings has acquired the stake that Hollard Life owned in Cannon Asset Management. Jonathan Hertz, the Chief Executive of Peregrine, joins us now for more. Hi, Jonathan. Sorry about getting my words a little bit muddled up there, but congratulations on this deal. What stake exactly will you hold in Cannon?
We'll hold 65% of Cannon, Alec. Thanks for having me.
Yeah, so this is actually taking control. My goodness, it didn't come across that way when we looked at it first time around. It's a big bet.
It is. It's an important bet for us. We've followed the business for quite some time. Very impressed with Adrian, Jeff, and the investment team and process. And we feel the timing's right.
You do have Citadel in your group already. Is the idea at some point to merge the two?
I wouldn't expect so. Citadel is a private client wealth management business. They build portfolios for clients that includes some in-house asset management and lots of multi-management, looking for the best expertise wherever it is in the globe or on the globe. We'd imagine Cannon will run a very separate and bespoke business. Hopefully their returns and their process will fit very well in other parts of the group, but they'll be independent and they'll be only able to get money from internal to the group if indeed they are the best. That's the way the Peregrine Group's always operated, and that's the way it would continue to operate.
The asset management sector is having a good run at the moment. I guess because it's deep value, Cannon hasn't really participated in that to the degree that it might have. Are you going to change anything?
We certainly aren't going to change the investment process, Alec. It's true to say that some asset managers, particularly those in the growth space, those that have followed the momentum have done incredibly well, and those in the deep value space have done less well as the cycle hasn't suited them. We would imagine that Cannon would certainly continue along this road. We want them to be the best in the sector in which they operate, and any support that we can give them, both from a distribution perspective, to some extent from a back office perspective, capitalizing on the scale that we have in a group with over 80 billion management, will be the value adds that we give for the business. Certainly from an investment perspective, we'd imagine Dr. Saville and the team ahead of us in the sector in which they operate, and we'd want them to continue in that space.
If you have a look maybe 5 years hence, it's taken nearly 20 years for Cannon to get to 3 billion asset under management. Where would you see that going in the near term?
We'd love it to go to 33 billion, and we'd certainly want it to expand. We think that the timing is quite right for a change from a sector perspective, and we'd hope that they'll capitalize. Traditionally, the deeper value sector specialists are people that do incredibly well when markets come off aggressively. We're currently in a very bull market phase. I believe that there will be some volatility in the months and years ahead, and we believe that the recipients of such volatility may well be businesses such as Cannon.
Now, it isn't listed, so working out the price is interesting. What processes did you go through?
We use a variety of metrics. We were fortunate in that we had a seller who wasn't massively involved in the business. It was really just a portfolio investment for them, so we were able to negotiate a price that we felt comfortable with. Ordinarily in these types of deals, you have management selling some of their shares. In this case, there was an opportunity for management to actually marginally take up their shareholding in the business. So we're all on the same page. It's not a particularly expensive transaction, but it does come with Peregrine committing themselves to the business, providing good working capital to the business, and providing an ability for the business to grow its distribution footprint, which we think is important if they're going to expand and grow their assets under management.
Just clarify that. You say management had the opportunity to expand their shareholding.
Yes, so management shareholding we've allowed to to increase slightly as a result of the transaction. They were slightly below that number, the 35% number, with certain ratchets that they had in place. It was quite a complicated shareholder structure. We think that we've made it much simpler. We've given them certainty. They're now material shareholders directly in the business along with us, and really it's just the stake from the pre-existing shareholder that we've managed to buy out and incentivize everyone accordingly.
So you've got Citadel on the one side, we mentioned that a moment ago. You've also got a very successful hedge fund operation. Now you've got deep value investing. Are you looking to cover the spectrum?
Well, I certainly think there's some other opportunities. You haven't mentioned our securities business, but possibly, it's certainly the second largest stockbroker in the country by volume. We run the number one derivative business as ranked by FM over the last 3 years. We've generally been successful in building businesses that are market leaders in their specific sectors. I'd like to think there are a few more opportunities we're looking at, and certainly we've communicated that to the market, particularly more so on the private client side, in the stockbroking arena, etc., where we haven't been major players to date. We've been more institutional and hedge fund prime brokers. We also think there might be some more opportunities in our offshore fiduciary businesses, where we run a very successful business under the Stenham brand within the trust and fiduciary space, as well as the asset management space. We were fortunate. I was on the show a few weeks ago mentioning our half-year results, where we were up some 50% at an earnings line, and we're hopeful that with the wind in our sails, we'll be able to do small incremental transactions which fit in very well with the group. We think Cannon's certainly one of those.
Jonathan, just to close off with, Sean Melnick, the founder of the business, you did mention Stenham. Does he still play a role?
He does. Sean is becoming the non-executive chairman of the group on the 1st of April 2014. He's very important in my life. We spend a lot of time together from a strategy perspective, and he's still a very major shareholder in the business. He has lots of wisdom to add and lots of history, and also a keen eye for a deal which is irreplaceable.